This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Real Money helps you think through ideas for investing and trading stocks. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media. We are TheStreet.com.
Turning point. The Bulls say more gains ahead. The Bears say brace for a pullback. So what should you do with your money? We'll ask the CEO of Charles Schwab, Walt Bettinger.
Food fight. Now that a Chinese company is buying America's biggest pork producer, should the deal be blocked? We'll debate it.
And gaining interest. Looking for a little extra cash, interest on your cash? We found a way to do it, but it's not as easy as it used to be. All that and more tonight on Nightly Business Report for Thursday, May 30th.
Good evening, everyone. Big ups and big downs. That's defined the market recently, and today was an up day. Investors brushed aside another sharp drop in Japan's stock market and focused on economic reports here at home. The economy grew at a slightly slower pace than initially estimated, and jobless claims ticked slightly higher. But that tepid news is being interpreted as good news, easing concerns the Federal Reserve would gradually pull back on its policies to stimulate growth.
Stocks did lose some altitude into the close, though. In the end, the Dow gained 21 points to 15,324. The S&P up 6 to 1654. And the Nasdaq up 23 points to 3491. So, as the market searches for direction, is it time to get in, time to get out? That's the question everyone's asking.
It's the debate of the summer. No, not Iron Man versus Superman. It's bull versus bear, buy versus sell. And right in the middle of it all is this man, Fed Chairman Ben Bernanke. Will he or won't he moderate the market methadone the Fed's been supplying in the form of $85 billion a month in bond purchases? Bulls like Federated Steve Auth say it won't happen soon, and if it does, it'll be a positive sign.
They're not going to start tightening till the economy really starts to get airborne.
Today's report on economic growth, a tepid 2.4% pace in the first quarter, suggests the economy has left the gate but is still taxiing. The Bulls' conclusion, the Fed, not to mention central banks in Europe and Japan, will keep pumping cash through the summer, and stocks, already up 16% this year, move higher from here. The Bears say not so fast. Bond yields are moving up, reflecting not only inflation fears, but growing Fed chatter suggesting that the money spigot may tighten sooner rather than later. Philadelphia Fed President Plosser said 2 weeks ago he'd like to see it scale back as soon as June. Add to that concerns that stock prices are anticipating faster growth than seems probable, and you see why some of the world's most respected investors, like PIMCO's Mohamed El-Arian, are taking a cautious stance.
At these level of prices, we are walking away from risk. We're not running away, we're not sprinting away because central banks are committed, but we're walking away. So we're taking money off the table.
Remember, market timing is a fool's game, but no one ever went broke taking profits.
So how do individual investors feel about the stock market, and what are they doing with their money? Let's find out now from a man who is in close touch with them, Walter Bettinger, CEO of Charles Schwab Corporation. Walt, nice to have you back on the program. Let me begin by asking you, how would you describe investor sentiment right now? Optimistic, pessimistic? Are individuals feeling that they missed out on the rally, or are they participating? What are you finding?
Well, Susie, thanks first for the invitation to be here. It's great to be back. I think most of our investors at Schwab are feeling pretty good. As you know, we're not advocates of market timing, and what we recommend to our clients is develop an investment plan that is going to have them taking a long-term perspective, understanding their risk tolerance, making sure they diversify from the downside standpoint, staying invested, not trying to guess the market, and keeping expenses low. So the investors who follow our advice at Schwab have done quite well. They've caught a very, very nice run in the last 3+ years.
All right, so you say have a plan, but you know, this is a very confusing time. There are a lot of choices out there. People aren't sure, should I buy individual stocks? Should I turn to an index fund or an ETF? U.S. stocks versus international. A lot of confusing decisions to make. What do you tell Schwab clients should be at the core of every single portfolio?
Well, I think every portfolio has to have a weighting in U.S. stocks. We're still the strongest, largest economy in the world. Our stock market is the most liquid. I believe it's the most trustworthy market out there. And core U.S. stocks should be at the heart of every portfolio. But I guess what I would add is that maybe even more important than that is understand your own risk tolerance. And volatile periods like we experienced during the financial crisis made a lot of people sit up and take notice that maybe their risk tolerance was a little bit less than they had been investing at. And so understanding that risk tolerance, as I indicated, protecting your downside with diversification, that's maybe even more important than what you put at the center of that portfolio.
Well, you heard Mohamed El-Erian in that report that Tyler just did saying that he's walking away from risk. But do you find that as the market keeps going up, that investors are taking on more risk, or are they becoming more cautious?
Well, I think investors have moved more into the market. The mutual fund inflows show that in recent times they have moved more into the market. Frankly, just the market going up, of course, is an indicator, as we know, that there are more buyers than there are sellers. But I think that the timing is less the issue than the realization of people that being in the market for a long time is the only winning strategy. Guessing the market is just so difficult. I like to say that even that broken watch is right twice a day, but that's no way to invest. When you time the market, all you end up doing is timing losses. Now, professionals like Mohammed or others, they might be able to make small moves, and he even indicated, I think, in his interview that he was only walking away from risk as opposed to moving aggressively away. That's not necessarily a bad strategy for someone who follows the markets every day. For the average investor, you got to stay invested. You got to live with some of the ups and downs, and in the long run, history shows you're going to come out ahead.
All right, lots of good advice. Well, thank you so much for coming on the program. Walter Bettinger, CEO of Charles Schwab.
And now to housing news. Pending home sales, a forward-looking indicator based on contract signings, rose 0.3% in April and continued to be well above levels a year ago. This as Realty Track reports that sales of bank-owned homes fell to a 5-year low in the first quarter. Meantime, the Obama administration is extending its home loan modification program called HAMP for 2 more years. The program was set to expire at the end of the year. And don't look now, but the 30-year fixed-rate mortgage is inching higher, now at a 1-year high of 3.81%, that according to Freddie Mac.
Turning now to market focus, we begin with developments in the deal derby between Clearwire, Sprint, and Dish Network. Clearwire has postponed a shareholder vote that was scheduled for tomorrow on Sprint's takeover bid because now Dish Network made a new higher counter bid for Clearwire. Clearwire jumped 29% on Dish's new offer. Dish and Sprint each gained less than 1%. Facebook gained on a pair of upgrades as analysts took a look at the impact of mobile video ads expected to launch as early as July. Jeffries said that the video ads could be Facebook's next billion-dollar business. Investors pushed Facebook shares to $24.55. That's a jump of more than 5%. CIT Group announced a $200 million share repurchase after the market closed today, hours after the New York Fed ended its oversight arrangement with the company. John Thain, who you remember used to run the New York Stock Exchange, is CEO at CIT. Investors piled into the stock more than 6 times the usual volume. And the share set a new 5-year high, closing at $46.90. That's up nearly 5.5% before gaining some more on the buyback news.
Costco reported a 19% jump in profits, but an 8% gain in revenue was below estimates. Costco's revenue from memberships was higher by 12%. The company said it plans to open an additional 9 warehouse stores by September. Busy summer there. Costco shares up 32% over the past year. We're off about 1% today on that revenue miss. They closed at $111.88. CNBC is reporting that Sony has hired Morgan Stanley and Citigroup to review hedge fund operator Dan Loeb's proposal to spin off Sony's entertainment business through an IPO. Loeb's Third Point Fund is the largest holder of Sony shares with a $1.1 billion stake. Sony CEO Kaz Hirai said the company's new board will meet on Loeb's ideas later in June.
The proposal is that we look to spin off about 15 to 20% of our entertainment assets. And we want to make sure that we have a thorough discussion of the merits of the proposal before we come to any conclusion.
Sony shares jumped when word of the review leaked. Sony closed at $20.84, up more than 3.5%. And still ahead, want to earn a little interest on your cash, your checking account? We found some safe ways to do it, but they're getting harder to come by. First, though, how the international markets closed today. As the pros debate whether stocks will move higher or pull back, some aren't willing to take the risk that goes along with putting money in the market. So what's the alternative for your cash? Our Kayla Tausche found one that's risk-free, liquid, and even earns a little interest.
For every investor in the stock market, there's another who likes their money right where they can see it, in their checking account, insured, and in a perfect world, earning interest. With that last detail hard to come by, experts say a high-yield checking account might be the answer. A high-yield checking account on average returned 1.64%, according to a bank rate survey out Thursday. That's an average of $280 per account holder per year, leaps and bounds beyond money market accounts or certificates of deposit.
In a low-rate environment where people are looking for yield, these accounts give you the opportunity to earn a higher yield on a portion of your savings without sacrificing either the safety or the liquidity of the money.
Worth it if you can stomach the requirements. High-yield checking accounts commonly require at least 10 debit transactions a month to earn the highest rate, and they only let you earn the highest interest up to a certain balance. With yields continuing to fall, the costs may soon outweigh the benefits. The extra $280 earned was an average of $400 last year, and experts say the numbers could keep going down since consumer interest rates lag the general market. Financial planner Derek Kinney says consumers should be realistic.
The biggest risk to a consumer is how much interest will they earn on the account. Keep in mind, CD rates are almost at an all-time low. Savings rates aren't paying much more. Consumers who are expecting too much may be very disappointed by what a high-yield checking account or savings account pays. Use this clearly for flexibility and liquidity. Use the account as a way to save money and keep it liquid. One of the best ways to use this is if you need the money in the next 6 to 12 months. Let's say you're a business owner who may pay taxes on some things a year from now. An account like this, liquid, pays a higher return than checking, could be a great alternative. Let's say it's a short-term savings goal. You've got your son or daughter going to college in a year. Park the money in this type of account.
To find one, look local at employee credit unions and regional banks. Internet bank Ally and brokerage Charles Schwab are two of the few companies that offer these accounts nationally, and just won high marks from Pew Charitable Trusts for checking transparency. Kayla Tausche, Nightly Business Report, New York.
And for those with a bit more patience, perhaps keep an eye on when interest rates might go up a little bit.
Well, no surprise in this new study, wealthy Americans benefit much more than low-wage earners from big tax breaks. That report from the Congressional Budget Office also finds that the top 10 tax breaks, like deductions for mortgage interest and charitable giving, will also keep $12 trillion out of government coffers over the next decade. The top 20% of income earners will receive more than half of those tax benefits. But not everyone is feeling wealthy these days. A report from the Federal Reserve Bank of St. Louis says the recovery has been uneven and that the average American household has a long way to go to recover the wealth lost during the financial crisis. The study took into account inflation rates and population growth and concluded that the typical household has regained less than half of its lost wealth. That's far below what other reports have stated.
Well, Susie, that $4.7 billion takeover of the pork giant Smithfield Foods by China's Shenghua is generating a lot of buzz. The proposed deal faces regulatory scrutiny, and some consumer groups are not, shall we say, hog wild about the deal. amid what they say are food safety concerns. And here to debate the topic is Patty Lavaria. She's the Assistant Director of Food and Water Watch, a consumer advocate group. And Rick Quinn is a principal at FDAimports.com, which advises Chinese companies looking to export to the U.S. and also works with American importers. Folks, welcome. Good to have you here. Patty, you say we think the deal should not be approved. What's worrying you?
So in the short term, Smithfield is the largest pork producer in the U.S. Any news that's going to make them bigger, we think, is worrisome for consumers and for U.S. farmers. Very short term, if they do as much exporting to China as they say they want to do, we're worried that prices could go up for consumers here. Longer term, we're worried about imports from China, and China is a country with a really very troubling food safety track record, and we're concerned that this is leading towards that eventual step.
And this company, Rick, in particular, has a she characterizes it as a troubling track record. They were sanctioned some years ago for using a known carcinogen as part of their pork feed. Should we be worried? How do you respond to what Patty just said?
Thank you for the opportunity to be with you. It's a good question. The answer is that Schwab is buying quality, and that's why they're buying Smithfield. If you read the reports in the Chinese press, the CEO is clear. He's buying supply chain management, integrity, technology, and scale. As to whether we should be worried about Chinese pork in general, I would simply say that 90% of the last 10 to 15 food recalls that represented significant health risk or death to humans in the United States came from domestic food production. So the Chinese food import business is certainly subject to bad PR, some of which is warranted, but most of which is not.
Some people, Patty, say that this is a national security issue, that this is going, obviously not to secure defense technologies or telecommunications technologies, but to a truly important national asset. It's easy to poke fun that they're just buying some pigs, but really they're buying agricultural production here. Are you worried about it as a national security issue?
Sure. I think we think the definition of national security should include how a country feeds itself, and this could lead to radical changes in the structure of our food system. And so we already have other meat companies that are owned by foreign companies. This is not the first one. This would be the first one where we have this Chinese presence, and there's been lots of evidence that this is not a place where our business relationships are always on equal footing as they should be, and we are very worried. The poultry industry already wants to import chicken from China. The costs of doing things there are so much lower, and we have to assume, we think it's a safe assumption, they will eventually get to that point with pork, and that is very worrisome. If you replace that kind of production, and put it in a foreign country, what are you missing if that production was cut off?
Patty seems worried, Rick, that Chinese product, Chinese pork, might work its way into the United States. You work with Chinese companies. My assumption is that Chinese food that comes into the United States would be subject to exactly the same standards of quality as the domestically produced stuff. And we already get shrimp, tilapia, other kinds of products from foreign sources, and I assume that they have to meet our standards too.
Well, it's true, but it's also true that foreign product is subject to higher standards. Importantly, from the standpoint of enforcement resource allocation at the ports of entry, only about 1.7% of products offered for import are subject to examination. So even if you multiplied that by a factor of 10, you would have 4 entries getting in without exam for every one that is examined. So to single out the Chinese is unfair. But from the standpoint of national security, it's certainly true that food infrastructure has an impact potentially on national security, and the congressional review that will ensue under the Foreign Investment National Security Act could, on the floor debate, use a populist approach to the definition of national security in a way to clog the proposed merger. But what I would simply say is this. You have a company in China with $100 billion in revenue last year buying a U.S. company with $5 billion in revenue. The Chinese firm is trying to recover their brand equity from some issues they had previously, and they're using Smithfield to do it. The idea that they would sacrifice that equity for short-term profit is nonsense, because the acquisition is relatively small compared to Schwab's market size.
All right, folks, we have to leave it there. Patty Lavaria of Food and Water Watch, thank you, and Rick Quinn of FDAimports.com. In a statement issued yesterday, we should point out, the company said Schwab will continue its long-term strategy and vision to to become a global leader with strict adherence to the highest standards of quality control and safety compliance. Its agreement to acquire Smithfield is fully aligned with this focus.
And coming up a little later on the program, cameras and screens you can wear. Will the next big thing be wearable technology? We'll take a peek into the future. First, a look at how commodities, treasuries, and currencies fared today. Amazon is going after Netflix. The online retailer plans to produce 5 new television shows following Netflix deeper into the world of original content delivered over the internet. The new series will be shown exclusively on Amazon's Prime Instant Video service that comes out later this year and in early 2014. Amazon rose slightly to $267, and Netflix jumped more than 3% to $222 a share. This stock has more than doubled this year.
As technology companies battle for dominance, the next big thing may not be the newest and coolest device, but how you wear it. John Fort takes a look at whether wearable technology is about to be a big part of your future.
We've had tech on desks, on laps, and lately in pockets, but the latest buzz, cameras, sensors, and screens you can wear. GoPro, Nike, and others have been doing it for sports. With sensors on your wrist and cameras, you connect to a phone. The next step is smarter technology you can wear all day. Google's first bid in that market is Glass, which goes on your face. Not clear whether people would wear something like that.
I'd have to try them out though. I don't know if I'd wear them in public while talking to somebody.
If they had sunglasses with TVs, I'd like that, so I could walk around and watch TV while walking.
You can't resist technology. If that's the mainstream where society's heading, it's that's just the way that you go.
At the D11 conference outside LA, Twitter CEO Dick Costolo weighed in.
Do you wear Google Glass? We're going to
No.
ask everyone that. No, because?
Well, I would have these glasses.
But you could wear it on top of it.
I could wear them on top of these?
Yeah.
No. I don't wear Google Glass. I wear these glasses.
Apple CEO Tim Cook was in the same camp, saying he doesn't think tech in glasses will catch on soon. Most people only wear glasses if they have to, but he called the wrist intriguing.
I think for something to work here, you first have to convince people it's so incredible that they want to wear it, because you two guys are wearing watches. Mm-hmm. If we had a room full of 10 to 20-year-olds, and we said, everybody stand up that has a watch on.
That just tells time, just a time.
I'm not sure anybody would stand up. Yeah. I don't see it.
The market could be huge. Cook said smartphones ignited the post-PC revolution, tablets accelerated it, and wearables could push things even further. But first, these companies have to figure out where on our bodies we're willing to wear this stuff and how it could be really useful. For Nightly Business Report, I'm John Fort.
And finally tonight, with all the focus on technology these days, one of our core building blocks seems to be getting neglected. We're talking about spelling. But several hundred students from across the nation are proving all is not lost. Jane Wells explains.
Long lauf.
Long lauf?
Long lauf.
Yeah, I don't know it either. But nearly 300 of America's best and brightest are giving it a shot this week in the 86th annual Scripps National Spelling Bee.
Echt.
Echt. Can I please have a definition?
Does spelling even matter anymore? In an age of spell check and texting shorthand, who cares?
Today, spelling matters, especially because it's the first impression you're often making on people. Whereas 30 years ago, we might pick up the phone and call someone for business. Now we're much more likely to send an email or even a text message.
Mignon Fogarty, a.k.a. Grammar Girl, warns to be careful relying on software to fix your mistakes. Many of these spelling bee words weren't even recognized by autocorrect.
Nenufar.
Nenufar?
Also nenufar.
Take Ninufar or Nenufar, a water lily.
Nenupar, Nenufar.
Autocorrect turns Ninufar into menu phase. This year's spelling bee has an added twist. Contestants also had to define vocabulary words, a completely different skill.
It would be almost as if you were having a Sudoku competition and suddenly you told people, well, they had to do multiplication tables to qualify.
And isn't the spelling part hard enough already?
Vociferous.
Vociferous. Could I get everything, please?
Sure.
Type in vociferous and autocorrect turns it into vaccine toys.
None of those programs are foolproof, and I've seen too many people doubt themselves.
Sometimes you just have to trust your gut.
Vociferous. Vacciferous. Vociferous.
And nothing can be as eudaimonic as when you elucibrate for months for a moment like this. For Nightly Business Report, I'm Jane Wells.
I would have spelled vociferous as machine toy or whatever it was, vaccine toy. The finals are tonight, and the winner gets $30,000 in cash, a $2,500 savings bond, and a big reference library, digital, of course.
Next, you have to be wearing those glasses that will tell you, how to spell the words. Yeah. Well, that's Nightly Business Report for tonight. I'm Susie Garrett. Thanks so much for joining us.
I'm Tyler Matheson. Thanks from me as well. We'll see you back here tomorrow night.
Nightly Business Report has been brought to you by
TheStreet.com, interactive financial multimedia tools for an ever-changing financial world. Our dividend stock advisor guides and helps generate income during a period of low interest rates. Options Profits helps educate beginning and seasoned options traders. Action Alerts Plus is a charitable trust portfolio that provides trade-by-trade strategies. Online, mobile, social media, we are TheStreet.com.
Susie Garrett with a Nightly Business Report news brief. Big ups and big downs, that's defined the market recently. And today was an up day. The economy grew at a slightly slower pace than estimated, but that was seen as good news, easing concerns that the Federal Reserve would pull back on its policies to stimulate growth. The Dow gained 22 points, the S&P rose 6, the Nasdaq added 24 points. Pending home sales, a forward-looking indicator based on contract signings, rose in April and continued to be well above year-ago levels. Well, no surprise in a new study, wealthy Americans benefit much more than low-wage earners from big tax breaks. And according to the Wall Street Journal, many Americans are canceling their home internet service in favor of using Wi-Fi hotspots. Be sure to tune in to Nightly Business Report right here on your public television station.